It's the weekly 30/30 trading list on the ASX. We're reviewing the 30 best momentum companies over the last quarter and the top 30 companies that have had the best improvement this week. Gary Glover's been through both lists, and what he's done is pulled out the best charts, those that look like interesting trades, those something we can learn from, and he's going to walk us through them today. Good morning, Gary. How are you?
Yeah, no, pretty good, Chris.
Good to be back. First time in 2024. We've had a nice break, so hopefully you've brought some good charts with you.
Yeah, market's sort of almost focused on pretty well here. Obviously, good run into the new year. So always, I think, sort of mentioned there at end of last year that the ideal setup would be to see the market run up to the old highs there in the first few days of January. But yeah, we definitely should be cautious after that period. So we should be a little cautious here now. So we've got to be looking for A setups here only currently. So I think it's going to be a tougher couple of months ahead here.
Right. Well, credit to you. I think it was back in October. You did say it would be great if the next 6 to 8 weeks were the best trading weeks of the year, and you powered through. You got some good trades, and I don't know, maybe you got some for us to learn from. That might be one there. What's that you brought up?
Yeah. So number 2 on the list is on Dom Eric. So this is exactly what we're talking about in terms of looking for an A setup here. So we've had that high momentum move there, pretty big volume jump. And we've had a little VCP sort of whole thing tighten up here. Not too much selling here. So notice, see how the selling had really dried up in here. Had a few little volume days in here, little jumps in here, some volume days in there. Then we sort of hold tight up here, and then we definitely break this little B wave in here. This is the first time here. We've got a bit of volume there as well. So there's a good little VCP in there. That's the type of A setup we want to sort of see there. See a bit of volume on the way through. Pull back on very, very light volume, jump again on some good volume there. So that's exactly the type of setup there we want to be seeing there. So as a sort of Calabagi says, looking for those stocks that show that, sort of real strength, pull out of the gate, then have the little pause, and then we're coming back in for momentum again. So that's a really good chart there, actually.
History here, and you did talk about it a few weeks ago. So you have picked that one up before.
Yeah, this was in my VCP list there. I sort of didn't trade this one actually because I pretty much had a full deck. So hard when you can't. There was a lot of signals there in the last few weeks. So it's like, I needed, if I'd had 3 different portfolios there, I might have been across some other ones, but yeah, it was hard to be across everything. So, but really now we've just gone through that patch there where there was so many. That will probably start to dry up a little bit here. So we're just going to make sure we choose sort of some big ones there. This one's had a bit of a pop there. I think we spoke about Atomic as well. So this is one to watch here because we've had a nice little jump there, possible change of character, broken above some old swing highs, and now we're going through a little bit of a tight pause here. So the thing I like about here, Chris, is we've had some pretty good volume up into the high here, and then off the highs there. Didn't see too much volume on the down, and saw some volume sort of come back up again here. So nice little contraction here. Hopefully not too much volume comes in there. Then we might start to turn up here. So looking for that pause here. So this has got the early signs of having a pause there. So it's definitely one we should be on our list here. Watching closely there. OPT was sort of one there that's had a little, had that little jump there. Some decent volume sort of through here. Then the whole thing sort of tightened up here. There's our little B wave break here. Bit of an aggressive break here. So sometimes a bit hard if they sort of gap through there, but it sort of did gap and fill that level and then go on here. So it doesn't look too bad here, but hasn't really kicked on here now. So gone back to retest one old high here. So looks okay there, but definitely look, like a few stocks there, sort of an aerial market there, potentially running out of momentum there. IMU is another one here that's had that big jump. Again, classic high momentum move there, big volume. Saw a bit of selling there, had the 1 day selling there, but didn't see the Didn't see super aggressive there, but we did see it a bit more than you probably like. Probably like I said, a bit lighter. The volume did come back in on the run again, and then it did dry up here a little bit more, a little bit less selling on this next shoulder here. So once we sort of kicked here, this day here was probably the tell, as we sort of jumped up here and had some volume there. And since then, it's sort of climbed here. So it doesn't look too bad here so far. Probably like it to get it up a little faster, but yeah, you probably just might be, so far we're hugging the 10, so that's looking pretty solid there. So you probably want to sort of stick with that 10-day moving average if you're in that one there. MPI, this one's pretty good here, Chris. This is a nice sort of pretty decent impulsive move up into this sort of high around that sort of 27 mark, and then the whole thing's really tightened up, gone sort of sideways sort of consolidation there. So if you look at the longer term time frame here, see this is a really strong impulsive move, and then a bit of a pause, and then a break again. Yeah, had a pretty strong move here, and now we've had another pause here, and just starting to come through the top side there. So that's a little Darvis sort of break there. So really, we've been in a really tight sideways consolidation there, just starting to come out the other side here. So first day break here, we sort of started to see some volume coming here. We closed at a new high there 2 days ago. So that does look pretty healthy to me. It does look pretty decent. And that's, the thing is that's used up a lot of time. You really consolidated quite nicely there. So you're looking for those sort of time consuming sort of pauses and then resume the trend here. So that's the thing about sort of the most sort of consolidations and little pauses in the trend there. They usually will break in the favor of how they moved into it. So if you rally out really hard, have a bit of consolidation, 8, 9 times out of 10, they're going to break in the way that they've actually ran into that consolidation. So always favors an upward break here. So this is looking quite good here overall. Try and remember, actually, might have been MGH there, sort of had that sort of gone back up to the high here, had a bit of a consolidation there, did break through there, had a few little throwbacks, but it just has continued to climb sort of since then. So we'll get, it's important to sort of study these sort of previous moves there. When they break out there, you can get, they can just take off. They can have a little throwbacks as well. But the early signs of good volume there is actually pretty positive there. So it does look okay. I think 2 year ways continue to keep rallying, Chris, out of that beautiful cup and handle. Just hasn't looked back. Hung the 10-day moving average the whole way as well. So that's why, talking about some of those strong stocks, once they do come out of those pauses or breaks there, they're pretty bullish. They'll just hug the 10 there. So look at that. TUA, just, the 10 day is the stop here. Even as the 10 day is, sort of add point. This is sort of Kalamagi looking for the stronger stocks. Pull back to the 10 day, add to it, run.
Really touched it, hasn't it?
Yeah, sell a little bit into heat, pulls back, touch the 10 day, add to it, run again and sell a little bit into heat, but over the whole time building the position up as well. Pretty solid move there. The one after it actually as well, VYS, this is sort of similar as well. So it had a pretty good move there. Probably a little small, but had a little sort of sideways consolidation there. And this is sort of, really this is held tight here. And then once it's sort of broken above the high here, it's just continue to keep going here. So, you could potentially call this a little cup and handle in here, this as well. Pretty tight, not very deep here. But yeah, once we sort of, once those sort of sideways consolidations, they break out in favor here. So, even that little gap up there wouldn't be too bad, 19, 20 cents there or something. So, let's continue to move on there as well. So that's the sort of patterns we're looking for. We're really looking for those sort of strong stocks, have a bit of a pause, and then come out, follow that there. That's probably the list there in terms of the momentum there. Probably a few more on the launch pad there. IPT, sort of first one here, had a bit of a dull bounce here so far, has gotten above the 50-day moving average, but has come back a lot deeper. see how that pullback is quite deep. So that's probably less attractive because you want to see sort of more of a sideways sort of consolidation rather than a deep pullback there. It's sort of come back deep in the range. So it's the beauty of sort of looking at your ranges, and then, you know, if the stock can sort of stay in the top 25% or the top third of the consolidation, not come back deep in the range there, that's a good thing to look for as well. So if you're looking at, just say, you know, having used Fibonacci's before, just put on something like, you know, 1/4 and 1/3, you know, 50%, things like, just put the basics on there. You can see sort of the stronger stocks will stay in that top 25, sort of top third there. I know McLaren used to talk about, you know, sort of, you know, the stronger stocks on the board would basically only come back a quarter of the range. So they can stay in that sort of top 25% of the range. They're in a pretty strong position there. So that'd be the ideal sort of setup here. So something like this. So you can see here that, you know, this Bannerman there has had a pretty strong run here. So gone from what, 120 up to $3 there. Really only come back to 240 there. So that's, you know, in terms of that range there, probably, you know, there's probably the midpoint of the range there. This is probably the quarter point there. So it's probably sat on the top 1/4 of the range. Stayed pretty tight here. So this is looking pretty solid here, really. That's a pretty impulsive move there. Pretty decent volume all the way through. There's sort of a little bit of distribution at the high there, which is come to be expected after, you know, quite a decent move there. You're looking at 250% move plus there. But this is a good sign here, because this is really just, you know, had a little ABC back in here, and the whole thing's tightened up here. So I've got a little VCP in here. All the ranges are tightening. Not showing too much weakness there. We're starting to see some of the volume starting to come in as well. So we saw definitely the volume sort of dry up here on these pullbacks there. We're going to dry up in here as well. Starting to see some of these big updates, starting to see some volume come in there. That looks really constructive there. If we zoom out, this is important to sort of look at timeframes as well. You can see this, obviously, this stock, you know, has some history of running pretty hard. Big consolidation back here, starts to build here, a little bit of consolidation and break again. Now, this has been consolidating for quite a long time here. So, you know, if we draw a trend line across the tops here, we've got a little isosceles triangle set up in there as well. And really starting to sort of come out of this, you know, breaking out on the upside. So the weekly time frame looks great. The daily sort of time frame looks pretty good as well. Really not showing too much weakness at all. Without tightening in here. I mean, look at those. There's our moving averages all converging there, Chris, as well. So you know, strong sector of the 50-day moving average. You know, definitely sort of yes, above your sort of, you know, 40-week moving average, which is the Weinstein sort of you know, stage 2 sort of style here. So this looks like a sideways correction. It might be on the verge of breaking out here again. So this is definitely one we should be keeping an eye on there. And it's interesting there. So if we look at all the sister companies to that, so BOE, that's had a pretty mild pullback as well. Boss Energy, Paladin as well. Look how tight that is, Chris, as well. So that's again sort of had a really good run here, kept pretty tight in the range here as well. So looks pretty good as well. EL8 there, probably come back a little deeper, this one here. So elevate your rate in there, probably had a bigger pullback there. But again, starting to tighten up here a little bit. All that moving average is all converging here as well, here again. Not as bullish. I really do like the tighter ones there. I think deep yellow is the other one there. Again, had a slightly larger pullback. So really there, that BMN, I'll pull back there. The Paladin is mild as well. And the BOE it's pretty mild as well. So they're the three that have probably held up the strongest in that sector there. So the
There's also Lotus Resources, is there? LO10? Hello, Lima, Oscar Tango, yeah.
I don't see that on there, is it?
A smaller cap one, but
Okay.
uranium's running, you'd see the VCP there, like April, May, June.
Yeah. Yeah, that one, I mean, that one's actually quite a different looking chart there. Hasn't sort of shown too much weakness at all, is it? So,
Yeah.
yeah, holding pretty tight there. So, I thought that was pretty interesting. Just that whole sector was pretty strong there. Really tight consolidations there. Not come back much at all. So, yeah, very very interesting sort of sector there. So, yeah, I actually did try to buy one of those this morning. I won't tell you which one. Haven't bought it yet. So, it's sort of showing too much strength there for me. I just important for me to get a good entry sort of risk reward there. So, but yeah, they look pretty solid there. BCI was number 5 on the list there as well. Nice cup and handle here, Chris, as well. So, I know it's a bit of a smaller stock here, but again, we've had that, really good, impulsive move here. Some pretty good volume all the way through here. A little pullback ABC. Had another move here, some pretty good volume. And then pull back here again. Not too much selling here. This is the key thing here. And also just holding tight in here as well. This is really, struggling to go down here. Once this thing starts to sort of go back up here, you see the volume starting to increase here as well. After being all very light through here, not much selling going on there. Starting to see volume starting to push here and push through. So it's a pretty decent volume there on the break as well. So even if you wanted to wait for the B wave break here, what's that, sort of around 28, 29 cents on the 2nd of January, they're just being patient there. That would have been a good sign there. That was a good volume day as well. It's sort of up and come through there. So that, it's still some pretty good setups there. So, if you look for those sort of higher quality ones there, IPX, this is another one. This was actually one on my VCP list, Chris, just because it's sort of been trending up for quite a while. This is a pretty decent pullback here. Come back under there. Another pullback a bit shallower. Come back to slightly high. Again, basically a third pullback even shallower again. So it's not sort of, just showing strength there. It's just really high, high low after high low after high low here. So this is looking quite positive to me. I think the weekly setup there, I mean, apart from this sort of spike high there, I never really like to sort of, McLaren always sort of, when you see a spike high, you'll see the stocks trade against the spike. They're always sort of wary of going back to retest the spike high. But we've probably used up a bit of time now and sort of been consolidating. So still one to sort of keep an eye on that. Still think that looks really constructive overall. YAL Yanco, bit of a VCP here, Chris. So, not the strongest sort of coal stock there, but I guess after that little run here, it did pull back in a bit of a tight manner. Then it did start to break through a little B wave here. So, okay signal, not the best signal here so far, but starting to break out there as well. I think I did look at some of the other sort of stocks in that range there. There was a couple of, Nice. You hope was looking okay there without looking fantastic. Whitehaven, there we go. Whitehaven's basically the other one that sort of did a little, B wave break as well here. So it's been sort of tightening up in here, little VCP in here, and then a little break there. So hasn't really, when I see a move like this, when you see the good little setup, then it breaks through. It's run here, but the volume hasn't been awesome as well. So for me, that's just a sign that you probably need to run this one a little tighter than the others. Because generally, if you get a good little VCP set up here and it tightens up here, this little, that was a nice little tight there after breaking through. This really should have, it's got motoring here, but the volume's a bit light here. So it's just sort of telling you, I know it's sort of holiday season, but still got to respect the fact that the volume's not fantastic yet. So, if I tried that VCP, I would just be running it a bit tight. I'd probably, be probably selling into some of that heat, taking some of the risk off, and just sort of sitting tight. But maybe it'll consolidate back, do another little tight setup, and then you can go again. If not, then you've sold some of the heat, very good profit. If it does pull back, do something different, and at least if still made a sort of nice profit there, and because that's the other thing too. I mean, with most of those sort of, with most of the pros there, Chris, they'll generally go home. Like if they get those sort of setups there, even if they sort of don't work, they'll often get the initial, with a lot of the fail setups, they'll usually fail after they move anyway. So you get a little pump up there, and all of a sudden that, because everyone sort of tends to trade a lot of these VPs, all these VCP setups, or loads B-wave setups as well. Is that they do get initial move. I noticed a few other sort of technical patterns like this where even when they fail, they might rally to 3 or 4 days first before they fail. So if you can sort of sell a little bit into heat, maybe like a quarter or a third, like a lot of the pros do, then you move your stop up to break even. If it fails there, then you usually go home a small winner anyway on a lot of the fail patterns. And if it keeps going, then you might be obviously a big winner. So that's probably the difference between that sort of next level professional trader, is that they will sort of, they'll really manage the risk pretty well by just selling a little bit into heat, getting their stop to sort of break even there, and they'll never go home a loser after getting a move that pops in their favour here. So that's just a really good habit to get into. Thought this one looks pretty interesting here. This is DGL Group. This is a really, really tight consolidation here now. So first pullback here, second pullback, third pullback here. The whole thing's tightening up here. Pretty lightly traded here so far, but we've definitely seen a few volume days, a few bigger sort of spikes on the volume here. Definitely saw that exhaustion of the low, and then the buys sort of step in here. So sometimes it's a bit of a building process as well. So sort of got our low here, maybe our first high low, second high low sort of set up here. So this one's not bad here. It's it's a bit of a strange company there. It's sort of DGL's, I think 60% of shares are owned by a founder or something. Which I think he regularly buys more of them. So it's never going to be taken over, unfortunately. But the founders, he's all in. So that's interesting. But that's I think there might have been one more EGG. Thought this was another little tight consolidation here. Just starting to maybe poke its head out a little bit there. Hasn't broken a swing high really yet, but one to keep an eye on there. Bit lighter on the volumes, but not too much on there. I think so getting a few in there. No real sort of trading votes there. I saw a couple that I did sort of write down there in the last couple of weeks. So there's one that I thought was quite funny, but probably 100% true as well, was that never invest in any idea you can't illustrate with a crayon. Which is a Peter Lynch quote, which is, it sounds funny, but actually that's actually so true. Is that you don't understand the company, you don't understand what they do, or it's too complicated. Like it's but to me it's like Bitcoins, pretty much. Like I don't understand like what 90% of those coins do, so I can never invest in them personally. So
there's one that comes to mind, a quote for Bernard Bright around the Jesse Livermore era. His quote was, he made his money by selling too soon, which sounds familiar to you, saying, even if there's a good setup that fails, if you sold into that initial heat and taken some profit, with a failed setup, you could actually still walk away with the profit, and that can separate the great traders from the average or amateur traders. So, is that something you've been working on? Being able to sell a little bit soon, selling into that initial heat, or maybe walking away with more winners, but still having skin in the game in case it rolls on?
Yeah, the biggest thing for me was I honestly had probably like the last 2.5 years, I was probably really tried to professionalize my trading approach, and I've sort of had 2 really strong years, and then the last 6 months has been probably a bit more difficult. But what I have done the last 6 months is really professionalize. It's kind of led to me to really professionalize my approach to the point now where I've got a really strong process, got a really sort of disciplined set of rules and stuff there. And it's really tightened up process. So sort of, you think about New Year's resolutions and stuff, I guess a lot of the traders and investors out there, is that I'd probably say that really try and focus on, apart from your sort of, everyone's feeling probably a couple of pounds heavier this time of year, and having that sort of health and wealth sort of goals there. But around the trading goals there, I would suggest sort of really tighten up that process there. Try and professionalize that process. Try and, just really around human behavior is that work out the things that you aren't good at, work out what what your weaknesses are, what your little traps are, and then try and take them out of the equation. And you can basically sort of create rules for you, which will stop you falling into your old traps as well. So that's for me. We're often our own worst enemies, and we know what type of what we're susceptible to. So so for me, I feel like my process has never been stronger. My sort of trading, my sort of 10 commandments and my trading protocols, and my review process. Like I've probably really stepped up my review process in the last 6 months as well. And it's always been a big positive. Every time I've done a big review, it's always been quite revealing. But I think that, if you incorporate that into your discipline process as well. So I'm really getting to the point now where I'm doing a lot of homework before I place the trade. So sort of just slow myself down a little bit. And then I've got my criteria there in terms of really it's really got to hit it out of the park here now. So the odd thing about doing that is, after you're sort of giving yourself a review sort of 20, 30 times there, then you're sort of scoring your process, is that you realize that, there's a lot of A plus and there's maybe A minuses, and you might occasionally creep a B plus in there because you're really trying to push something else in there. But by reviewing that and following that process over time, then you realize that your energy should be focused on the A pluses, and you shouldn't be worrying about the B minuses and even all the A minuses. And also we start to detach ourselves from trades as well. It's definitely because sometimes we might read about stocks and have some bias towards them because we really like the fundamental story there, but oftentimes technicals, that's one thing I've sort of seen this year is that probably, I think about, say, 10 of the stocks that I thought were fundamentally the strongest, like in terms of what I was reading there, probably 7 of those have been really good. I think 1 or 2 of them have sort of been probably, sort of flat, and there's probably been 1 or 2 out of that, maybe 10%, which have been pretty average. So really sort of, 20, 30% been weak to sort of flat, gone nowhere. So you still got to have a process. You can't be sort of sitting in those flat, going backwards, sort of, going nowhere sort of trades as well. So they're not moving and they're not doing the right thing. We just shouldn't be involved in it. Should be focused on where the action is, where they're moving. And so for me, I feel pretty positive about 2024. I feel like I've got my process at the highest level here. It's going to be a bit of tricky few months ahead here. I think going to be volatile, but still should be some pretty good trades there. Still just really got to focus on the A setups here. So got to be more selective than ever, I think, for the next few months.
They're really good insights to look at, being more selective for the time ahead. Criticals of where the market is right now. For the review process, doing your homework before your trades, grading your trades, and I couldn't help but to smile and smirk, think of you doing your homework, grading it with a crayon in hand. But that very true insights.
Well, I think that writing down stuff, that's because I've literally I've gone from using a spreadsheet, Chris, on my PC to actually printing off a trade review sheet and actually writing
each trade,
writing it down, writing down the notes as well, and that's when I know this. You read a lot about the physical act of writing it down, and diarizing stuff is more powerful than timing data entry. So definitely finding that is helping as well. So I still keep my spreadsheet, but my trade review there's my little trade reviews there. They're all handwritten. So it keeps me in check there, and I go through them all the time. So it's,
Well, we're back to pen and paper and possibly crayon if you're creative enough. Well, to that end, we've got some insights to take into the week ahead, the first week and of the trading year since we've done a video. So thank you very much, Gary Glover from Lotus Capital.
Thanks, Chris.